I don't expect him to be hawkish or dovish. I expect him to be relatively muted. And this is not the Jackson Hole that Jay Powell expected or wanted. First of all, he thought he would be there in person, as did the other participants. And a week ago, Jackson Hole decided to go virtual. And that's a testament to what's going on in the economy and the Delta variant. Chair Powell thought he could come to Jackson Hole and talk about Delta and COVID on the ebb and the economy surging. And that's not been possible given what's happening right now in the US. And he also thought he could go to Jackson Hole next week and say the policy framework that the Fed announced 2 years ago at Jackson Hole about inflation running high, about resetting average expectations, reforming the way we think about inflation expectations had worked. And he can't say that right now. Inflation's high, there are too many question marks. So for all these reasons, there's just too many X factors for him to be hawkish or dovish. He can't start landing the plane on quantitative easing, and that's what he wanted to do, and he won't be able to tomorrow.
So essentially, Jackson Hole is going to be a bit of a non-event then. What do you anticipate then will be the reaction for markets if that's the case? Because we've been essentially sitting around waiting for this event for the best part of the last fortnight or so, waiting for clues from the Fed.
Well, that's right. The fact it's a non-event is a story in and of itself, right? Because if you have 120 billion a month being spent on asset purchases and mortgage-backed securities, and when a housing market's already hot in the US, and everyone recognizing that that's too accommodative and still being unable to begin even indicating that you want to start unwinding that itself is a statement. And I think it's a statement about the interconnection between quantitative easing, interest rates, and full employment. And it goes back a decade, right? The central banks have become too addicted to quantitative easing. And what Powell wants to do, even if he can't start landing the plane on quantitative easing in the US, he wants to start unwinding this Gordian knot of how quantitative easing and interest rates and full employment all got tied together. And so he might have a more theoretical speech where he says, when we start tapering, just understand markets, that doesn't mean we're going to start raising interest rates. And I think that's what we might see tomorrow, even if we don't get the specific policy indicator folks have been looking for.